I have found what I believe to be one of the best opportunities in the market right now, and it's getting almost no attention, which is crazy because of how undervalued I think it really is. And if you ever wanted to know about a stock like this, now is the time to do so when no one is talking about it and not after it's ran up hundreds of percents, which I also believe that this company can easily do. And that's what I want to explain in this video. I've spent a good amount of time researching and analyzing this stock because I believe there's truly the potential to make a lot of money here. I promise I'm trying to give you some real value here and not just some hyped up bullshit. It's a stock that I'm personally investing in and I'm putting my money where my mouth is, as I do in all the other videos of stocks I talk about. I don't want to waste your time, so I'm going to give you a quick breakdown of what we're going to talk about, and then you can decide if you want to stay for the whole video or not. So the stock we're going to be talking about today is GigaCloud Technology, or ticker symbol GCT. It's a really high growth business to business e-commerce stock that I think is deeply undervalued and Wall Street is completely sleeping on. It's had really explosive revenue growth, it has high profitability, a unique advantage in the marketplace, and I think it's trading at a deep discount for a whole range of reasons that I want to talk about in this video. So we're going to go over what GCT does and their value in the market, and then we're going to move into my investment thesis, which is comprised mainly of 4 parts: the growth and expected outlook for the company, its financial fundamentals and key metrics, the huge valuation discrepancy that I think is happening right now, and the insider confidence within the company. Now, of course, this is not financial advice. If you're risking your own money, you have to do your own due diligence. I'm just simply sharing my thesis on my personal opinion regarding this company, but that does not mean you should just go ahead and buy blindly without doing your own research first. This is purely just my thoughts and my personal opinions. But now, with all that being said, I'm super excited, so let's dive right in. So firstly, what is GigaCloud Technology and what do they do? GCT is a business-to-business e-commerce platform specializing in large parcel goods like furniture, appliances, and fitness equipment. They have a very well integrated logistics solutions that allow suppliers to store, sell, and ship goods through GCT's platform, essentially providing a one-stop solution for global manufacturers. The key thing about this company, unlike its competitors, is that they manage their own logistics, and that reduces the shipping cost by 30 to 40% compared to traditional freight services because they own that process themselves entirely. Having that full stack of integration of managing the marketplace and the logistics behind it and owning that entire process gives them the ability to run a way more cost-efficient operation. And they have a massive supplier network primarily in Asia, which gives it a unique sourcing edge. They're proving to show niche market domination. It has no major competitors that focus exclusively on large parcel business to business. They have a very low customer acquisition cost because it's a great solution for resellers, and it really encourages resellers to use their platform. And on top of that, the platform has the ability to expand without massive inventory investments. So why does this matter? It's really difficult for other competitors to replicate what GCT is doing due to the supply chain complexities that are required to run a business like this. Okay, so now that you know what GCT is and what they do, let's take a look at my investment thesis on this company. First, I want to take a look at their growth narrative story and what their expected outlook is for the future. GCT's revenue has grown 65% year over year, significantly outperforming competitors in the B2B e-commerce space. Now, something I want you to keep in mind for the rest of the video that we're also going to address is that their current market cap valuation is at $600 million, while their revenue is $1.1 billion. Just keep that in mind. Additionally, their gross margins are expected to increase as they implement AI into their logistics. GCT is actively expanding its presence in North America, Europe, Asia, targeting a $1 trillion total addressable market in the large parcel B2B commerce. They're looking to add more warehouses in the US and Europe that will accelerate delivery times and increase logistics efficiency. Again, it's all about that logistic control that they have, and that gives them such a good edge. And the cherry on top will be the product expansion. They still have many products they can add to their catalog. They're currently focused on furniture, appliances, and fitness equipment. However, GCT is expanding into home goods, industrial equipment, and other high margin verticals. So there's so much room for growth there too. GCT is definitely still in their early stages with massive room to scale. Now let's take a look at some key financial metrics and trends. From their latest filing, we can see that the revenue growth was 65% year over year with a total revenue of $1.16 billion. Their gross profits have increased 51% year over year, now at $285 million. And their gross margins sit at 24.6%, which is actually really good compared to other e-commerce companies. Their net income is sitting at 125.8 million, which is a 34% year-over-year increase, and their profit margins are at 10.84. Again, those are super high compared to other companies, and they have been pretty stable. When it comes to their balance sheet, they have a total of $302.4 million, and they do have a total debt to equity ratio of 119%. Although that is high leverage, it is manageable because they have strong cash generation that can offset some of that risk. So now I want to show you guys some key financial efficiency and valuation metrics that are widely used by investors. These metrics are used to give investors a good idea of whether a company is undervalued and financially strong. So I use ChatGPT here to help me run some of the most common financial valuation metrics so we can get a better sense of the company and their valuation. The first one is a very well-known metric known as the Rule of 40, which states that the revenue growth rate percent plus their profit margin should be above 40%. If the sum of those two percentages are greater than 40%, then the company is considered financially strong. If we run that calculation for GCT, we can see that we get a Rule of 40 calculation of 75.84%, way above the 40% metric. And it's actually really rare to see a company with such high revenue and profitability combined. There's not a lot of companies out there that meet the Rule of 40. This is usually a metric to value high growth software companies, and when we apply it to a business-to-business e-commerce company, it's far exceeding those expectations. So this should really tell you something. I also did run a bunch of other well-known metrics to compare valuation. Feel free to pause the video to look at any of these formulas with more detail, but I'm going to go over them briefly just to show you guys what these metrics are saying about the company. So first, the PEG ratio, which is price to earnings growth, is sitting at 0.14. Any PEG ratio under 1 is generally considered undervalued, but GCT's PEG ratio is sitting at 0.14, which is extremely low, meaning that the stock is growing earnings rapidly while trading at a deep discount. Next, we calculated a return on equity for GCT. The return on equity percent here is sitting at 36.17%. Anything above a 20% is generally a sign of strong management, efficiency, and profitability. So GCT being at 36% is actually excellent, and this shows strong return on shareholder investment. Next, we have EV to EBITDA, which sits at a 5.09. Anything under a 10 suggests a stock is undervalued, and this is sitting at a 5. They also have a free cash flow yield of 14.6%. Anything above a 5% suggests the company is generating strong free cash flow. So GCT is sitting at 14.6, which is exceptionally high, and this indicates it has substantial cash relative to its valuation. And finally, the only one out of all of these that represents some kind of risk is the debt to equity ratio, which is honestly not even that bad. They generate a lot of free cash flow, which offsets this risk of leverage. And let's not forget, they have 302 million in cash alone, providing them ample liquidity. So yes, they have a little bit of debt, but it's definitely manageable. So now let's try to determine a fair value estimate for the stock and some price targets that we think the stock should be trading at. So we can use these financial metrics, compare them to the market and its peers, and then be able to determine a fair value estimate for this company. So I have ran here a price to earnings based valuation, a price to sales, and an EV to EBITDA based valuation to help us determine the fair value for the stock. As you can see, their current PE is sitting at 4.78 with a forward PE of 5.38. The industry average for an e-commerce and logistics company is sitting at around 20 to 25x. This implies a fair value estimate of around $52 to $70 per share as it stands right now. On a price to sales valuation, the current price to sales ratio sits at 0.51. They are making double what their company is currently worth in revenue alone in a single year. So the company is valued at 611 million and they're making 1.2 billion per year. Now, of course, that's just revenue, but still on a price to sales, that multiple is so low. The industry average is 1.5 to 2 price to sales. So if we were to apply that to this stock, it would put it anywhere between $35 to $47 per share. Now on an EBITDA based valuation, using the same kind of logic, if we apply that 12 to 18x multiple that the current market would suggest for an industry average, we would have a target price range of $20 to $35 per share. So as you can see, we have a fair value range for the stock, anywhere from $35 to $70 per share. This is currently trading at $15. That means we have an upside potential of around 150 to 400% from the current price levels. So looking at the numbers alone, we have a really strong case for showing that GCT is deeply undervalued. And honestly, it has massive upside potential. I personally think there's a huge valuation discrepancy and the market is not giving it the attention it deserves. It's not every day you find a company meeting and exceeding all of these metrics. So I think there's something really weird going on here, and that's why I think it's important to talk about this. So on top of all of that, I also want to address insider confidence in the stock with their share buyback programs and institutional ownership of the stock. There was currently a $46 million share buyback program approved in 2024, which means that the company is actually reducing the total float and giving more equity to investors. This is a really good tell for insider confidence in the long-term prospect of the company, and it also gives a lot of confidence to investors because their shares are not getting diluted. Additionally, insiders own about 20% of the shares, which signals strong confidence in the long-term growth of the company. Now, when it comes to institutional ownership, it's sitting at 11%. This means that Wall Street has not come around to the stock yet. So there's massive upside potential when funds start buying in and they start to realize the true value of GCT, then this will absolutely skyrocket. Now, with all that being said, of course, there are some risks associated with this stock. They have major competition from big companies like Amazon and Alibaba. There are macroeconomic factors like interest rates and inflation that can impact the stock, and the dependence on the Asian suppliers is a geopolitical risk. However, GCT has first mover advantage. They have strong profitability, which shields them against these macroeconomic risks, and they are constantly diversifying their supplier base and expanding global reach. So now let's summarize and get my final thoughts on the matter to make this very clear. I believe GCT is massively undervalued and it's one of the best opportunities I've seen in the market. It's trading at only 5 times its earnings despite the rapid growth. It has massive upside potential as they expand their global reach and add more products to their lineup. They have an insanely large total addressable market, and their high growth numbers are really showing proof that resellers are actually finding value in this company. Financially, this company is looking super solid. They are a really high cash flow positive business with very high margins, which provide a lot of stability for investors. And there's a huge discrepancy in the market as to what this company is actually worth. I don't think people are seeing this yet. And when people start taking notice of this and institutions start buying in, I think this has the potential to go very far. The fact that they're trading at a PE of 5 and a price of sales of 0.5 is beyond me considering all the stuff that we just spoke about. If GCT traded just at 10 times its earnings, the stock would be around $30, which is 100% upside of where we are today. I think once the market sentiment changes, as of course right now we're going through some pretty tough times with geopolitical risk and the Trump administration, tariffs and whatnot, and a positive, confident sentiment comes back to the market, stocks like these are going to be the ones that profit the most. Now, of course, this is just all my personal opinion. I would love to hear if you guys have an opinion on this stock. You can let me know down in the comments below why I'm wrong, maybe, because I'm genuinely curious and I really don't understand why it's trading at such a low valuation. But yeah, if you found any value in this video, a like would be super appreciated, and maybe consider subscribing as I'm going to be sharing all of the market opportunities that I see. Hope you guys enjoy, and I'll see you on the next one.